Hey there, business enthusiasts. Today, I'm diving into a fascinating comparison to help you understand the difference between the stock market and the sales market. So, let's get started. First up, definitions. The stock market is a financial marketplace where stocks, or shares of ownership in companies, are bought, sold, and traded. Think of big names like the New York Stock Exchange, NASDAQ, or the Bombay Stock Exchange. On the flip side, the sales market is where goods and services are sold to consumers or businesses. This includes retail stores, e-commerce platforms, and business-to-business markets. Now let's talk about purpose. The stock market exists to facilitate investment and trading of company shares. It helps companies raise capital and allows investors to earn returns. Meanwhile, the sales market is all about selling products or services to meet consumer or business needs, focusing on generating revenue through sales transactions. Who are the participants? In the stock market, you've got investors and traders buying and selling stocks, companies issuing shares to raise capital, and stockbrokers and market makers facilitating transactions. In the sales market, the key players are consumers purchasing goods or services, businesses buying supplies or raw materials, and sellers or marketers promoting and selling products or services. So, what's the nature of transactions? The stock market deals with intangible assets like stocks and bonds, with prices fluctuating based on supply, demand, and market sentiment. The sales market, on the other hand, deals with tangible goods like electronics and clothing, or services like consulting and delivery. Prices here are usually fixed or negotiable based on production costs and competition. When it comes to the duration of ownership, buying stocks in the stock market can lead to long-term ownership or short-term trading, with ownership implying a partial stake in a company. In the sales market, purchasing products or services often leads to immediate consumption or use, with no ownership stake in the seller's business. Regulation is another key difference. The stock market is heavily regulated by financial authorities such as the SEC in the US, ensuring transparency and protecting investors. The sales market, however, is regulated by consumer protection laws and trade regulations, focusing on fair pricing, quality standards, and consumer rights. Lastly, let's address the risks. The stock market is high risk due to market volatility and economic fluctuations. Investors can lose capital if stock values decline. The sales market presents lower risks as transactions are typically straightforward, though there might be risks involving product quality or supply chain issues. To summarize, the stock market is a financial trading platform aimed at investment and capital raising, involving investors, companies, and brokers dealing in stocks and securities, and regulated by financial authorities. The sales market is a marketplace for goods and services aimed at revenue generation, involving consumers, businesses, and sellers, dealing in tangible goods or services, and regulated by consumer and trade protection laws. In essence, the stock market is about financial investments and ownership in companies, while the sales market revolves around the exchange of goods and services for revenue generation. Thanks for tuning in, and I hope this clears up the differences for you. Don't forget to like, subscribe, and leave your questions in the comments below. Catch you next time.